Hello and welcome back to our final video in our video series on trust fund recovery penalties. In this video, we are going to be discussing how the IRS goes about assessing and collecting the trust fund recovery penalties from those they've deemed responsible.
Right. If you remember in the last video, we talked about who might be a responsible party that the IRS is going to investigate and sit down and interview. But once that process is conducted or concluded by the revenue officer is going to recommend whoever they feel fits the bill, right? They're going to recommend that the trust fund recovery penalty be assessed to those individuals, and they're going to issue a notice. Once you receive the notice, or if you've already received a notice, typically if you disagree with it, you have 60 days to appeal, and then it'll go to the IRS Office of Appeals, and then you complete your case at that point. Otherwise, once the 60 days elapses, the bill will become collectible, and then the IRS will initiate collections much like they would a regular federal income tax liability. And that's pretty much what happens for the assessment of the trust fund recovery penalty.
Great, thanks Sean. Well, that concludes our series on trust fund recovery penalties. I'd like to remind you that if you are dealing with a payroll tax or income tax issue, it is always important to seek the advice of a tax professional to make sure that the issue is being handled properly. If you would like to contact us, our number is below. We do offer a free 30-minute consultation.